I'm using Bitcoin as a proxy. All right, so if Bitcoin breaks above that, then that would be a bullish thing for other cryptocurrencies. As long as Bitcoin doesn't break above this area that I've just shown, then in general, that's a negative for other cryptocurrencies.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed. Before listening to him, please ensure to smash the like button and subscribe to the channel.
Let's touch base on where the markets are sitting. So we do have the S&P futures trading sharply lower this morning. This is on the back of more concerns about interest rates going up, the economy remaining strong. And yes, you heard that right? Think about this. The economy is strong, so stocks are going to fall. Kind of messed up thought process, but the bottom line is a strong economy means higher interest rates, or at least higher for longer before the Fed is willing to cut. So that again is a negative. If we look at the 10-year yield, and I'll pop up my chart in just 1 second here let's take a look at the 10-year. So this is the 10-year yield. And the reason why you want to pay attention to the 10-year yield is it's basically going to be inverse to generally what the stock market does. The higher yields go, remember the psychology of it. If you can make 10% in a bond, why would you risk investing in a stock when there's risk of that stock going down? So there's the trade-off, right? Now, some people are going to require 20%. Some people are going to require 2% return on a bond to make it worthwhile to switch out of stocks. But there's a trade-off, meaning that the higher yields go, the more people are going to say, you know what? I have this, potential to make risk-free 5%. Let me not risk my money in Tesla stock right now at these levels. Let me put it for that guaranteed 5%. And that's why higher yields in general are a negative for the stock market, right? It forces money or draws money out of it. This is why in 2021, when interest rates were zero, there was no one that wanted to be in the bond market. Everyone said, hey, why would I be in the bond market for a 0.01 return in my money market or in my CD or in my bank when I could just go in the stock market? Sure, there's risk, but you know what? I'll take that risk because at least there's nowhere else to put my money to make any money whatsoever. So that was the trade-off, and I think that's important to kind of recognize and go from there. All right, so let's go to the crypto charts here. Let's get right into Bitcoin, see what we got. So Bitcoin, guys, you can see clearly continues to run into major resistance. The 25,300 level continues to be the level that I have on the chart that is a sticking point for Bitcoin. All right, the reason it is, number one, you have a beautiful parallel channel right here. Look at the trend line, how it kind of connects through these highs, and then look at how many times we've pierced this line and haven't gotten through. In addition, the highest pivot, this is the highest pivot since the June collapse, right? Since this collapse over here, the highest pivot was at 25,000, approximately 300. So it makes sense that that's going to be a sticking point in the near term for resistance in Bitcoin. Now, again, am I short Bitcoin? The answer is no. In fact, in Verified Investing Crypto, we still have a long on Bitcoin, but I am kind of itching to move out of it and potentially short it. Now, we do have other short signals out there. Over the weekend, I pulled the trigger on an Avalanche short. So if we take a look at Avalanche here, Avalanche had a beautiful kind of move up on the daily, collapse to support, move back up, and then you're basically right into this resistance. So for me, we had already made about 16% on this short prior, and we covered it. Now it had gone right back up to where we shorted it before into resistance. I said, you know what? Let's try a good old-fashioned rinse and repeat. And the idea there is that it's double top, resistance, and also the Bitcoin chart is at resistance. So what I'm doing here, folks, is I'm using Bitcoin as a proxy. All right, so if Bitcoin breaks above that, then that would be a bullish thing for other cryptocurrencies. As long as Bitcoin doesn't break above this area that I've just shown, then in general, that's a negative for other cryptocurrencies. All right, so that's that one. Let's go to Ethereum here, see what Ethereum has in store for us. Now, Ethereum continues to have kind of the same channel lines up here. There's a lot of resistance. The positive on Ethereum, you could make a case that it's making bullish consolidation. It's not the prettiest, right? By no means is it the prettiest bullish consolidation, but it would be classified loosely as bullish consolidation. Now, what does that mean? Well, it could mean we have one more move up to maybe around $1,785 before we hit major resistance. All right, so again, keep an eye out for that. That is a possibility on ETH, that you could have one more move up. What would change my mind? See this upsloping trend line that we got below briefly and tag this support. If we start trading back below that, that would negate the bullish pattern, and you'd have to start expecting a bigger move back to the 1300 range on that chart. All right, let's keep going, guys. I want to look at the SPY chart here. See what we got going on here. And again, bullish consolidation right there, again, on the S&P 500. Now, this is prior to what we're seeing today. We are seeing the spiders dropping pretty sharply. I'm not looking to play this bullish consolidation. Instead, I'm waiting patiently for a retrace to what I call the scene of the crime. What is the scene of the crime? Let's do some education right here. The scene of the crime is basically when you have a major breakout of a trend line and you retrace to that scene, essentially, of the breakout crime. All right, so if we zoom out on this chart on the spiders, you have a pivot high from the all-time high in the S&P, pivot high, pivot high, pivot high, pivot high, and you broke out right here above the blue line. So if we get back to that blue line, there's a swing trade opportunity, not a long-term. I'm not a long-term bull on the S&P, but a swing trade long, absolutely right there. That's at around 393 on the SPY, which is the tracking ETF for the S&P. Let's take a look at Walmart. So Walmart came out, their earnings were not good whatsoever. Take a look at this, guys. So basically what we're seeing this morning, and I'm going to go to my my after hours or my pre-market data here so we can see, I've seen a little bit of a bounce here in the early kind of the late pre-market before the market opens. The market's open right now. Looks like in about basically just less than an hour's time. If we go back to the daily, we can see that that line is at 140.150. That is going to be a major line in the sand. All right, so if that breaks, be very careful. You'll get day tradable bounces. I see a very good day trade that I will take in my live trading room today, which will be right here. If we were to flush to 138.75 for a day trade. Remember, day trades, folks, for those of you that do not know, day trades are quick in and outs intraday. So you're not holding it overnight. You're not holding it for a week, a month, a year. Day trades specifically, you're in and you're out. So that would be a potential day trading level. Basically what you do is you do a chunk of money, you throw a chunk of money at some shares, you look for a quick bounce, and you exit that trading opportunity. Gold, I want to look at gold here. The gold chart here, we are seeing it trying to hold support right here. I still think there's one more move down on gold here, down to this level here around 1800 before it becomes a full-fledged bull market. So again, we'll watch that to see, and we'll go from there. Okay. All right. So that's one of the things to kind of keep an eye on here. Let's go to the silver chart real quick, and we'll go from there. So the silver chart, guys, it did hit support. I did pick up a little SLV with my trading group at Verified Investing Alerts, which is at inthemoneystocks.com. And again, we are in the money slightly on that. I added right down in this lower range right here. And again, I will continue to add. There's a lot of support here on silver at all of these lower levels. I think the most downside you probably would get would be around $20.80, somewhere in that vicinity. But I actually do like silver now. Silver is now pulled back into a range where it actually makes more sense for me. Okay, we'll do one or two more questions. Let's talk about Tesla today. So Tesla has remained resilient. It was up on Friday. I think pre-market it is falling. Let me just double check. Yep, it is down pre-market at 205.70. But the most important thing on the daily chart is that it's into major resistance here and here. So could it go up to 223? Yes. But between these two levels, I expect a big pullback back to about $140. So be very careful if you're long Tesla here. This is not something that you want to. Remember, the stock has rallied 100% off of the lows. So you shouldn't, for me, I never buy something that's even up 5% off the lows. I just don't want it. I'm not going to chase it. That's the key.